Welcome to Target Market Insights, the multifamily and marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Welcome to Target Market Insights, the multifamily and marketing show. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. If you're enjoying this podcast, do me one quick favor and leave us that 5-star rating and review. And if this is your first time checking out the show, make sure you hit the subscribe button so you don't miss an episode. Now, today we're going to be talking to AdaPia Dorico. AdaPia Dorico is a visionary leader with 20 plus years of experience across countries, cultures, in both corporate and startup environments. She has co-founded businesses, launched brands, and redefined industries. Today, she is the principal and the VP of strategy of the real estate private equity firm Alpha Investing, where her firm invests in multifamily, senior housing, and affordable housing nationwide, and has a portfolio of over $1.5 billion in property value. Let's welcome to the show, AdaPia Dorico.
Hi, John. Thanks so much for having me.
Absolutely. Thank you for coming on the show. I went over your bio at a very high level. Why don't you take a minute or two and give us a little bit more context?
Sure. Well, I'll tell you how I got into real estate. So my background actually begins when I was 18. I started working in a bank. This was like, to me, I really loved investing and financial planning. And I personally think that it's something that should be taught in schools because what I learned there really has helped me be successful in life. And, as my career progressed, I've worked in hedge funds, I worked in insurance, I worked in banks, I lived in Europe for a while. But, fast forward to about 2012, 2013, and, I was living in LA, I moved to Los Angeles. And I was, I got involved in real estate crowdfunding. And that's how I really got started in real estate. I was, I had this background in finance, but at that point I was an entrepreneur and I was doing a lot of work with creators and I was doing intellectual property development for them. And I got into just let's call it normal crowdfunding, like Kickstarter and Indiegogo in the early years, like 2010. And so when crowdfunding came along as an option to invest, I thought how amazing I can turn fans into shareholders, which made a lot of sense to me. And then when I heard of real estate crowdfunding, I just like this light bulb went off and I thought, this is amazing. This is going to be something huge. So I got into the industry really early. I joined one of the very first platforms, which is was a lending platform called Patch of Land, which I helped to launch. So I became the CMO and the face of the company, and I became an evangelist for real estate crowdfunding because I believed, and I still believe, what it did is it created access and transparency in an industry that has benefited operators and investors and continues to do so. I didn't know anything about syndication back then. So as I was meeting like people that have been in real estate for a while, they were like, yeah, you kids are like, this is called syndication. It's been around forever. You're not doing anything special. And we were like, we're going to change the industry. We're going to upend everything. And we did because we brought the marketing element of the internet. And we brought this new way of relating to people and building trust, because before you would, really was kind of country club. So that's like one of the things that I've found just to be really a benefit. And so I got into the real estate industry and I haven't left. I love it. I love real estate investing. It's so interesting. It needs to be added to like any investment curriculum because I've taken all my securities and financial planning, like licenses and stuff. And real estate is like, there's like zero attention paid to it. And yet it is such a foundational element of building wealth. And so, today I'm on the equity side, raising capital and helping people build passive income portfolios with real estate. And it's just such a wonderful industry, you continue to meet people like you and just, I don't know. I love it.
I love it, man. Listen, I want to go back to that time, where you're kind of, one of the leaders of Patch of Land, and you're talking about just changing everything. And you mentioned kind of the old guards talking
Hmm.
about, hey, this is syndication. This has been around forever, and you guys are very energetic, changing it. But they didn't really understand the internet and how to do
Yeah.
internet marketing and how to really take things forward in this century. Not to mention, we had the Jobs Act, which made some things policy wise very different and actually opened up the doors for more people to get into it. Can you talk a little bit more about maybe some of the changes that you saw and what you were able to implement during that time frame that maybe wasn't happening prior to that?
Yeah, I think the biggest change comes down to an understanding of consumer behavior, of how we behave and how technology both shapes the way we behave and how we shape technology by our use of it. And so I think what was happening was there was this disconnect between this idea that I really have to get to know someone. And build this relationship, and look, it's super important, and the irony is that all of this gets integrated, especially for me today as I see it. But we were in this era of everything was coming online, and the way the Jobs Act looked at it, and this is rule 506C, is the internet is basically a giant marketing mechanism, therefore we need to regulate it. And so that's the prerogative of the SEC. And so I think what was happening, and it's like anything, if you're entrenched in the way you do something, you don't want to change it. And technology is scary, and and then you have the SEC coming in, and so everyone's just like, I'm just going to keep meeting people offline. But everyone was going more online, and you have thousands and millions of people, of accredited investors, who are looking for ways to deploy their money. And where do you look when you want something? Like, you go to Google. That's normal. And so if you didn't have a presence there, you were going to be left out. And so I think it was just this time when it was, we all thought in the industry we were going to change real estate. And instead, we were just taking advantage, or being at the forefront of a change in behavior. We didn't change real estate, but we understood behavior, and we understood what people were looking for, which is information, which is, teach me about this. I want to know, I want to understand, which is why content marketing became so important. And this idea of educating people and providing value instead of selling, which is still true today. And it's a huge behavior shift. But it's benefited everyone. I've seen so many other syndicators and sponsors and operators also understand this and really build their businesses with having a website, with having a white paper, with having an email list, with just showing up and saying, here's who I am. Because this is a trust building exercise.
Yeah, I mean, so much has changed from, even that time, right? So you're talking about, the early 2010s, so 2012, 2013 to
Yeah.
where we are today. I mean, obviously a lot has shifted. Where do you think the biggest change or the biggest evolutions have taken place where crowdfunding is today here in 2021 versus kind of where it was at that infancy in the digital age?
Where it relates to specifically real estate is the
Yes.
crowdfunding. The
Yes.
crowdfunding companies have become real estate companies. They started off as tech companies. And so that's, again, I just smile because this is a real estate business, not a tech business. Tech enables and facilitates the administration and the back end, but especially when it comes to equity investing, it's not about technology. There's a whole bunch more data, but you're not going to automate an algorithm, an equity underwriting. Like, you go in and you do the underwriting and you look at the details, and you can't automate that. I mean, you can do some automated stuff with the lending side. It's a little bit easier because loans are there's mechanisms in place with loans where you can automate that a little bit more, but you can't do that with equity. And like, even in the, like, to think about it as fintech, right? Has been an amazing influx of technology. banks had a lot of technology before. Banks are fintech companies too. And so all we've seen is just a facilitation of transactions through technology. But the crowdfunding companies that started as like, we're a tech company, are all like, hey, we're a real estate company. So that's been an interesting kind of integration. And then you have the real estate companies that have adopted the online marketing methodology. So it's really just become one giant industry.
Yeah, no, I appreciate that guidance. I think it's really interesting watching that evolution, especially as tech takes over our lives, and we've seen that more in the last year than ever before. But it's great to embrace technology, but it doesn't replace the underlying business or whatever it is that
That's
you're
right.
actually doing. Technology is there to assist and make things easier, facilitate, but it's not to simply replace it with algorithms and spreadsheets and all of that. So
Yeah.
really great to hear you talk about that.
Yeah.
In your current role, I know that you are really working with, investors and doing these larger deals. Talk to me a little bit more about kind of what you do in your current role and the kind of deals you look at.
Yeah. So in my current role, I spend a lot of one-on-one time with investors. And so this is again, it's really important. We're building relationships with people. If we're asking people to invest tens of thousands or hundreds of thousands of dollars with us, you can run an email sequence for sure. Like you can do everything automated, but people want and need and appreciate the relationship. So at Alpha, when and I'm one of the principals, like I call investors, I spend a lot of time talking to investors, and we have to have a conversation with them before we give them access to our deals, because we're a small team and we want to keep it small and we want to build relationships with people. And I can't tell you how much, like every single call, every investor says, thank you so much, because I'm new to this or I'm just learning and I don't know the right questions to ask, or maybe a more experienced investor does, but they're the ones also who want the relationship, and it's important. It's really important to people because I feel personally that we're the whole technology and the marketing and the emails, we've been inundated, and so nobody's reading them anymore. And we're just getting hit with so much information that they actually like the phone call because they're like, oh my God, it's a person. And I can ask you questions and I can have the conversation, and it helps them want to deploy more capital. So, I spend a lot of time with investors, and, I'm as VP of strategy rather, I'm really focused on the growth of the company, on how we help to grow our investor base, but more than like grow the number of investors, it's really retain and grow their portfolios with us. And so what we do is we're looking at larger deals in the multifamily, senior living, affordable housing, like the housing space in general. And so we work with institutional operators that have to have about $500 million or more. A lot of our operators have a couple billion of transactional experience, AUM. And, we facilitate the transaction with our investors. And what we're super focused on as a company is the underwriting and bringing the best risk-adjusted deals. Our focus professionally is to understand whether a deal makes sense and to bring those deals forward to our network.
Yeah. So just to recap this for someone who's maybe not as familiar with the space, you really work on both sides, right? You have two arms to how you operate. You are working with institutional operators. So you mentioned those folks who have $500 million or more of assets under their management. And you're working with them. You're vetting the deals. You're underwriting those deals. You're finding the best ones to present to investors. And on that side, you work with investors. You work with individuals who are looking to park passive capital into these deals. So you kind of partner with these operators to bring these investors and their capital into the deal, to make everything work. So for you, you've got two sides to vet, right? You're vetting those investors, make sure they feel comfortable with the process, the opportunity, and you also have to work with these operators. Let's start on the operators. I know we were just talking about the investors, but I want to let's come back to the investors. For the operators, what's your process like, to actually vet these operators and to figure out which ones are worth partnering with and investing in their deals? What kind of things are you looking for?
Yeah. So aside from like the transactional experience, what we're looking for in a qualitative sense is a relationship. So a lot of our sponsors, or all of our sponsors, we want to be recurring capital partners. Like, as you know, it's so important in real estate is to know that you can show up and close a deal. Like, you can bring money to the table. And so you want capital partners that are going to be able to show up with that money. And so we're looking to build relationships with these sponsors, who can rely on us for, the amount of money that we're deploying. It's like anywhere between these days 1 and 5 million, let's say. And so so on the sponsor side, we really want to build long-term relationships and be recurring capital partners. We can get involved in the deal. We've done work with some of our sponsors to help on with like the lending side, or whatever it is. Like, we want a good deal. We want to be successful. We want our investors to be successful. And when we vet a sponsor, it takes us a pretty long time. Like, we really work with currently about 6 or 7 sponsors, and we're probably looking to expand to I'd say maximum 10 or 12 over the next couple of years. And we're looking for the breadth of experience, the depth. We're going to look at their portfolio, and we're going to look at their track record. We're going to look at all the things that you want to look at to vet somebody, their background, their records. We spend a lot of time getting to know them, getting to know the deals that they've done, how they view a market, where their expertise is, their philosophy, and which is important. Like, what's the business plan? And that's kind of what I mean by philosophy. Like, there's a philosophy in investing, like why they're in business, like what's their secret sauce? What's that special thing that they do? Do they have an edge, or do they have like an interesting strategic partnership? And we're really we're really looking for sponsors that are also solid, like willing to show up, and willing to be good partners to us, like not ghost us, not just like float a deal and then like, oops, I filled it somewhere else. Like, that's not cool. Because we're serious. Like, we're going to spend a lot of time underwriting. And just as an aside, I did a presentation where, and I can send the link, we have it on our blog, where I gave about a 30-minute webinar about how we underwrite, just like super high level, and like what we look for in our sponsors. So these are some of the things.
No, that's awesome. We'd love to share that link. So would appreciate being able to drop that in the show notes here. Just to recap some of the things that I heard you say, you're looking at, really the experience of the sponsor. You're trying to understand, what happened with the deals that they were a part of. You're trying to understand their business plan, their philosophy. You want to make sure that you are a recurring partner, so opportunities to continue to invest. You work with 6 to 7 partners now, but looking to maybe grow that to the 10 to 12 space over the next couple of years. And I wrote down the word integrity, people who are going to follow up and stay true to what you say. And if they do float an opportunity out there, to at least communicate if something's changed, but to operate with some integrity. And I think that's really important. You and I were talking, I know that for many of our listeners, they may not have the track record, the amount of years and the amount of assets under management that you look for to operate. But I think there's still a lot of things that they could learn, and maybe to better position themselves to work with accredited investors or higher net worth investors. As you think about some of these different elements, and maybe we can dig into that integrity word a little bit more. What are some things that a newer operator or someone who's newer in this space, what are the things that they could do to stand out and actually demonstrate themselves as someone who's credible and worthy of partnership?
Oh, such a good question. So for a newer operator, what it really comes down to is your transparency and your communication style. Like, if somebody wants information, you better have a good model. Like, it's not back of the napkin math. Like, it's not just like, oh, trust me. This is, it's interesting because you still have people that kind of operate that way because real estate's fast, right? They're like, oh, I got to get this deal done. I don't have time to, put it all together. But if you really want to take your business to the next level, you have to operate as though you are that next level operator. So your model needs to make sense. Your assumptions need to be realistic. Like, don't always sell the rosiest picture. We know how this works. Like, we know that the assumptions are always going to be like the rosiest, but be really prepared and be willing to communicate. Like, one of our newer sponsor partners, that's been just outstanding performance, and they're newer. They have the requisite like AUM and experience, but they're a little bit newer. Like, they don't have like 30 years, right? They're younger, but man, do they communicate. Like, they're on it. Like, they every month, like they're explaining everything, and they just nail it with that. And so it makes us as like we're responsible for our investors' capital. We're stewards of their capital. So if you're an operator, know that any investor, whether it's a private equity firm like ours or an individual investor that even wants to give you $50,000, they want to feel like you're solid. And that's your integrity, which means I'm communicating to you professionally. And like, that is like one of the most important things you can do, because the trust and the integrity that you're building comes through by how you are communicating and your willingness to be transparent. That's really important, because these days, especially, we can find out everything. Everything's up for grabs. You can't hide anything.
Yeah, listen, I think your point right there about communication, trust, integrity, transparency, these are the things that, especially passive investors, right? If I'm going to relinquish control of my capital and the deal and the operations, I'm looking for someone who I can trust as a partner. I think on the other side of this equation, obviously most of us aren't batting 1,000, right? So we're not perfect as far as the deals go. And I think people may get a little nervous when they get asked those tough questions about a deal that maybe didn't work out, or an opportunity where, you didn't knock the ball out of the park, and maybe quite frankly, a deal where you just flat out messed up. And it feels like, hey, this may kill that trust with this investor because I'm going to be showing, deals that maybe didn't work out as well. I want to talk about vulnerability a little bit, right? And how should we be managing that? If you have a deal that maybe didn't pencil out or didn't work as well as you would have liked, or you just went through tough personal issues, whatever the case may be, how vulnerable should we allow ourselves to be in some of these situations?
Yeah, it's so important. And I think one of the things that we have to get over, also as a society, I'm going to go really high level, is this idea of perfectionism. Like, we just suffocate under this idea that we have to be perfect, like you said, and like bat 1,000. One of the best things you can do is say, here's my worst deal. Here's what happened. Here's what we learned, and here's how we changed. Right? It's unrealistic for an investor, any investors listening, to expect that somebody is always going to hit their pro forma, because you never do. And that you're always going to have the best deal possible, and then it's always going to be knocked out of the ballpark. And it's just not how it works. And so there has to be like a give and take. But I think it's really important to say, like, we ask, like, what are let's say like your 3 worst performing deals? We want to see those, and we want to understand how you worked through them. Like, how did it happen? Because stuff happens. But more importantly, what did you do about it? How did you solve it? Like, how did you get out? Like, it's really important. And like, what did you learn? And how did you implement those changes into your business today? Because along with the perfectionism is this idea of failure, which is also total BS. Like, it's like we learn with every experience, whether it goes great or whether it doesn't go great. So I think we just have to shift the language and get over I'm going to use the word fear, like the fear of, oh, I got something wrong. Well, of course you did. I would expect you to.
Yeah, and I think too, like it helps when you have an experienced investor on the other side of that conversation, because they recognize that, and they're aware that, hey, I don't expect every deal to go perfect. And I'm really trying to understand who you are, the way you think, the way you operate, the way you adjust, and ultimately that's what's going to happen. I mean, going back to a sports analogy, you can't expect to make every shot. You can't expect to be perfect in every play. It's really a matter of those micro adjustments, real time, and the ability to pivot real time, make adjustments on the fly. That's what you're really looking for, someone who has that ability to make sure that the deal overall goes swimmingly, not someone who's just perfect, because at that point, you don't even know if it's the situation, the circumstances, the economy. You had a great property manager. I mean, there are a lot of other variables at play
Yeah.
there. So I really like the fact that you talked about the perfectionism and maybe not focusing on that. It's okay to recognize that, hey, we have some deals that didn't work out, and to be clear, to be transparent. And hopefully you did learn something that from that opportunity or that missed opportunity that you've adjusted and implemented into your business going forward. So really appreciate you giving us that context there.
Yeah. No.
Yeah. So on the deals that we're talking about, and kind of going back to the operator and the ways that you can stand out and make sure you are delivering for investors, you did
Mhm.
mention communication, right? Making sure that someone is clear, that they're communicating frequently and often about what's going on with the deal. Um, when you think about communication styles, you talked also about, calling investors and making sure that you are picking up the phone and not just sending emails.
Yeah.
What is kind of your preference when it comes to, making sure you're communicating deal points or updates on the deal? How do you
Mhm.
keep your investors informed of what's happening with the deals in their investments?
Yeah, so the way we do it is via email. So we have a portal people can log in, but we really only do 9 or 10 deals a year. So it really comes because we're just so selective. And so we communicate it by email. And so people are on the email list, and we'll check, like, so one of the things, just kind of like a little like technical tip, I guess, like we'll check the email open rates, and we'll see, maybe some people haven't opened the last X number of emails. And so we'll reach out like, hey, maybe I've noticed like you haven't opened any emails. Like, you just don't know that people are also busy. There's spam filters. There's so many things going on. Like, usually our deals are like oversubscribed. But if there's, you have to look at the statistics too, and your data and your analytics, and kind of look and see like, hey, like, I remember having a really good conversation with this person. And this is especially true for me when I speak to women, because there's so many women that are really interested in passive real estate investing, but they're so busy and they're moms and they're doing all this kind of stuff, and they might not think to. And so an outreach, which is like maybe like a separate email or a text to just say, hey, like, haven't heard from you in a little while. Like, do you want to get on the phone? Because that first 30 to 60-minute conversation that we have is probably not enough for a lot of people. So, it's kind of a mix of both. It's, here's our deal. Here's the executive summary. Here's the investment summary. Here's the timeline. Here's what's going on. But it's also a following up with like, hey, how you doing? Like, maybe like every 6 months if we haven't like chatted. Some people just want to invest in the deals, and they're happy to do that. But a lot of other people need some nurturing, and they appreciate that outreach to say like, hey, like, I meant it when I said that we build relationships. Just want to make sure that, are you still interested? Like, is there other information that I can send you? You just never know. We're so busy. We're so
Yeah.
busy.
And things change, right? I mean,
Yeah.
what's changed? Has anything changed for in the last six
Right.
months, 9 months, and your investing
Yeah.
criteria, your time frame,
Yeah.
things like that? So good to know. And given that, and given where we've been, kind of with COVID and everything else has
Mhm.
happened, how has your investors, right? How have they changed, or what questions are you getting more of now than you used to get, say, a year ago?
Yeah, it's such a good question, because even over the course of the past year, the questions have changed. Right. Right. So in the beginning, it was like everybody, right? The whole world was like, what's going on? Stop. What's going to happen? And so we got really focused on the asset management, with our sponsors, and just lots and lots and lots of communication. We were doing, I want to say, about monthly for the first 3 to 4 months, like a CEO letter. Here's what's going on. Here's what our sponsors are doing, kind of high level. Here's how we're positioning our thoughts around underwriting and things like this. And basically, we said, we're going to take a pause. until we can evaluate what's going on. And so at first investors were, maybe those who were invested were concerned about the portfolio. Those who weren't invested were probably just, out in their own world as they should be. And then what started to happen around the summer was, as we saw economically and as we saw the market did not, at least in multifamily, it was still really strong. All of a sudden, and to our surprise, all these investors were like, I want to invest. They were just like, I'm ready to invest. And so we were like, okay, that's amazing, because we also are seeing our operators, our sponsors are having deals. And so the questions started to shift around like geographical areas, right? Because everything, especially multifamily, is going to be driven by jobs and job growth, and the population migration and the acceleration of trends that COVID really highlighted. And then as the year progressed, they were asking, how did the portfolio perform through COVID? And so they were asking, how's the portfolio performing? They were asking, how did your underwriting change? So if you're an operator, like we're changing our criteria on, our maximum level of comfort with revenue loss overall. So like, that floor became much, much higher, if you will. So we tightened our underwriting criteria. And so investors were curious about that. And then they started around the winter, they started to become really interested in like, what's the next big thing? They started to increase it went from less cautionary to even more optimistic. So it's been a really interesting like wave of caution, optimism, which makes sense because everything is like that. But I did see it translate with our investors.
Yeah, and that's pretty in line with what we saw. I mean, to your point, I think in the springtime, we paused everything and really started to really just reflect on what we had and tightened our belts and try to make sure all of that was operating as smoothly as it could. And we started to see demand start to increase in the summer and the optimism slowly start to increase. And in fact, I thought it was increasing a little faster than I was comfortable, but nonetheless, we're at a point today where, I think people are looking for kind of the next opportunity and recognizing that, hey, you know what, there should be some great investment opportunities now. And I think it just goes to show the resiliency of commercial multifamily. It's not to say that it's completely, insulated from the economy, but multifamily is pretty resilient, and I think this last little shift demonstrated that ability. For folks who want to learn more, I don't know what your process is, but folks who want to learn more about kind of your deals or your investing criteria, what's the best way for them to reach out and learn more there?
Oh, yeah. So if you go to alphai.com, ALPHAI.com, you can request access. And then that's the process that you go through. So you would be getting on the phone either with myself or one of my partners. So we don't just like have open access. So you would have the conversation. We can talk a little bit and see if there's a good fit. So that's how to get in touch with me about, sort of our process. We have, like I said, there's the post about how we underwrite. There's some other like blog posts and stuff like that. But the meat and potatoes of it comes through that like hand-to-hand combat of having the phone call.
Yeah. And I want to switch gears a little bit, right? So I know that you have a book that you've been working on. And I want to hear a little bit more about this book and what inspired you to write it.
Oh, yeah. Thank you. So yeah, I wrote a book. I published it. It's called Productive Intuition, Connecting to the Subtle. And it's really a book about trusting ourselves. It's all about how we find what I call inner authority, which is something that took my whole life for me to understand around, we can use our gut a lot of times, right? Like we talk about like love yourself and we do all this personal development work, but do we trust ourselves? And so many of my life experiences, including like huge investment losses actually, and like choosing business partners, and all of my worst moments came when I didn't listen to my intuition. And all of my best experiences came when I did. And I got to this point in my life, especially after having a moment where I thought I couldn't have a career anymore. And I thought I would never go back to business. And I just had to go into like a deep personal exploration and figure this out. And the book kind of comes around for me as how I learned to trust myself and how intuition works, because I'm like very left brained and I love research and I love to understand. And maybe intuition seems like really woo, but it's not. It's actually built into our biology. And then it's all about this, like, how do you know? How do you know if somebody's the right partner for you? Like, in real estate, like you can make the numbers say anything, right? You can meet somebody and you might get a feeling about them, but you're not taught to trust your feelings. You're not taught to trust that instinct. It doesn't mean that that's a bad person. But if there's something about that person or about a deal that is just giving you like little signals, that you got to listen to that, even if it means, hey, I got to do a little more research. So these are just kind of like some examples, but the book really is about how do we find within ourselves this level of deep, deep trust that allows us to live a life where I know that my authority over my own life is mine, and I'm not giving it away to some external authority, which we've done far too for long, right? It's like, no, I'm it, and I have to trust myself to make the best decisions for myself.
Listen, I love that. And if you were watching us on video, you probably saw me smirk and kind of throw my head up to the sky a little bit when you talked about, the worst moments where you didn't listen to your inner authority. And I can relate to that holistically. The deals where we did not see success were the deals where I basically trusted someone else, even though I saw things that I was concerned with. And I will tell you, it's the reason we kind of transitioned our entire approach to make sure that we only partner with people who we've really trusted in, who saw the business the way we saw the business. And on deals where we're kind of the lead, we obviously have a lot more say in all the things that take place. But I think it's really important to develop that inner authority, as you said. And, it sounds like it's a great read. I'll certainly keep my eye out on it. The book is called Productive Intuition, correct?
Yes.
All right. Productive Intuition. We'll certainly try to make sure we send a link to that as well. All right. We're about to switch gears though. Are you ready for our bullseye round?
Yeah, I'm ready.
Give me a failure or an apparent failure that sets you up for later success.
So I lost $250,000 to fraud many, many years ago. And the reason that actually set me up for success is that it was one of the catalysts that actually helped me get into like the real estate crowdfunding space, because I was making this investment, wasn't a real estate investment, but it was kind of in more of a private equity venture capital space. And I thought I was going to be able to invest in more companies and kind of get more involved as an angel investor. But I lost it all to fraud. And there's like a whole big story around it, which ends with me getting all my money back this year, 7 years later. But it set me up for success, which took me years to understand, because it forced me to go into the space more as an operator, if you will, as opposed to like an outside investor. And so I found myself having to completely rebuild. And if it hadn't been for that, I actually wouldn't have gotten into real estate crowdfunding at all. I wouldn't even be here. And I just can't imagine a better industry or place or partners that I have today. And what I learned from that helped me understand how to pick partners.
Let me, this is a quick sidebar from the bullseye round, but do you think that experience also makes you better suited to work with passive investors?
I think it makes me better suited in general, because that trust element and what I learned, my integrity is like the most, like, it's so important to me. And I know how I was made to feel when I had questions. I was made to feel stupid and not important. And this person had more important things to do. And just like all these subversive psychological tactics. And so for me, I'm just like such the opposite. I'm like, any question you have, is a valid question. And if anybody tries to shut you down, you walk away. And to me, it's like, it's everything. If we can't trust our partners, in addition to trusting ourselves, like you're never going to invest, and you shouldn't. And so I need to earn your trust. And I'm not going to do that by selling. I'm going to do that by like telling you how things are, including, like we talked about, like, what's your worst deal? What's your like so-called failure? Things like that.
I mean, listen, that insight is so powerful. I just want to bear it because I mean, your experience kind of mirrors an experience I had where if a partner or someone is dismissing your concerns, that is the greatest red flag. I don't care what their track record says. I don't care how much, and it's easy to look at them and say, oh, well, they've got more experience. If they don't take the time to alleviate your concerns, if it's a stupid question or something that's not relevant, they should be able to explain that. They should be able to explain why the risk of something happening is very minuscule. And they should be able to take the moment to answer your question because it's a legit question or concern that you have. And if they don't, you should just walk away. Don't even spend time trying to figure it out. Just walk away at that point, because that's a huge sign about the character of the individual you're working with or the organization. So I just want to make sure if you don't take anything else away from this episode, please take that away. It's the most important thing. You have to deal with people that are going to keep you and your investment in their mind and not just focused on whatever their goal is. All right, let me get back to the bullseye round.
Yeah. Give
me a digital or mobile resource you recommend for your business.
Oh my goodness. I was going to say LinkedIn. as honestly, like as a digital resource, I find like LinkedIn really, really important, because it helps you understand somebody. What are they posting? Are they active? How do they interact? As a level of like resource, I guess I'm going to think about it as a syndicator, maybe as an operator. How many resources do you have on your site for investors? Like, we don't publish like a ton of content. We don't have this big SEO strategy, but we have some like pretty beefy articles that'll give you a pretty good sense of who we are and how we do things. So, use your content wisely. And if you're an investor, see what that content is like. I think content is a really important digital resource that needs to be leveraged as well.
Give me the book you've recommended or gifted the most in the last year.
My book.
Besides your book.
Yeah, I'm just kidding. So I think one of the books that I found to be really important are like, it's not any one book, but like people's biographies, like books like Richard Branson's autobiography, or like a Steve Jobs autobiography, or like a Warren Buffett one. Like, those are really important books because, again, you're learning from somebody's experience. And those are really powerful. Those are really powerful books because we're humans. We learn through story. And so people's stories are inspiring. So any kind of biography or autobiographical book in the category that you're looking for.
Give me a daily habit that helps you stay focused on your goals.
I meditate. Yeah, I meditate, and meditation and contemplation. So giving myself space, and not just in the morning or at night, but like even like during the day, is to take space. I take space in between calls. I don't book them back to back. I need to back out. I need to think. I need my space. But definitely meditation, because it really helps to center and focus and calm, especially during a busy day.
What's one thing you know now that you wish you knew when you were starting out?
I would say, that's a really good question. There's so many things. I would say this as a woman when I was starting out, because this is also like over 20 years ago, is the intention with which you do something determines the outcome. So when I started in my career, I was doing it because I thought that was going to make me successful, like a lot of external validation, and, business because I wanted to be successful. Today I'm in business because I want to be, because I really enjoy it. So the intention is really different. And so this comes back to like knowing my own values and trusting that those values are the right ones. That's something that I wish I'd known, because before I was doing it for others. Today, I do it for myself, and my outcomes are just like 180. So successful, no drama, so many incredible people in my life, just so much abundance in so many ways. And it comes from the intention with which I do things.
What are you curious about right now?
Well, I'm always curious about, I'm going to say it this way, expanding my consciousness. So really understanding who am I and how I continue to show up as myself, this like authentic, true self, which goes back to the values, it goes back to everything. So I'm always interested in dropping the ego and dropping the roles and dropping the identities. And so I'm always curious about, why did I just say that? Why did I just do that? That's not really me. And super curious about these patterns that I can actually unravel and drop. So I'm constantly in that space of curiosity about myself.
All right, we're going to go something a little more lighthearted here. All right. I know you're out on the West Coast, right? I forget where exactly. Where are you at?
I'm in Los Angeles.
LA. All right. Give me the best place to grab a bite in LA.
Oh my God. I don't know why this came to me, but Randy's Donuts. It has to be Randy's Donuts just for the donuts. Personally, because I'm Italian. I think if you want a fantastic pizza, you go to Pizzana in LA, but also like Trejo's Tacos, like all the food trucks that are still around, like you can just, but so, like when you said that, I just like, I pictured the 405, I pictured Randy's Donuts and like that's it.
Listen, and if you want to get your great, tourist photo, you can go ahead, stand in front of the Randy's Donuts and get that shot as well. So there you go. Well, listen, this has been a lot of fun. I really appreciate you taking some time to talk with us today and really learning about your journey. I mean, it's really incredible going from, patch of land and starting out in kind of the fintech space and really being a part of the team to really bring crowdfunding to the forefront of the industry, pivoting and adjusting throughout your journey. And then where you're at today and what you're doing, really working with both investors to get into some of these larger apartment syndication deals, but also work with these operators where you're partnering with these institutional level operators for these quality assets for investing purposes. I know we got your contact info a little bit earlier, but for those who want to get in touch with you, learn a little bit more about you, what you've got going on, what is the best way to reach out?
Yeah. So the best way to reach out, aside from Alpha, I would say come and find me on LinkedIn. Like shoot me a message. I'm easy to find with my name. You just type AdaPia. I'll be like the first person and the only person that shows up. So LinkedIn is a really great way to connect with me. If you want to learn like a little bit more about me personally, I have a website, adapiarico.com. But really, LinkedIn, Instagram for people who are on Instagram. I'm on Clubhouse these days as well. But I would say LinkedIn and the Alpha site are going to be the best ones.
AdaPia, thank you for coming on Target Market Insights, the Multifamily Marketing Show. We hope to see you again soon. Take care.
Thanks, John.